Hello everyone and welcome to our new video. Today we will take a look at what is stock market. The stock market is a public marketplace where stocks, bonds, and other securities are bought and sold. It is also known as the equity market, and it is one of the most popular investment options available to investors worldwide. Stock markets provide companies with a platform to raise capital by issuing stocks or shares to the public. When an investor buys a stock, they are essentially buying a small ownership stake in the company. In return, they are entitled to a portion of the company's profits in the form of dividends and/or capital gains. The stock market is made up of various exchanges, such as the New York Stock Exchange, NYSE, and the Nasdaq. These exchanges serve as marketplaces where buyers and sellers can trade stocks and other securities. The exchanges operate electronically, and transactions are executed in a matter of seconds. To buy and sell stocks on the stock market, investors typically work with a stockbroker, who acts as an intermediary between the buyer and seller. The broker charges a fee or commission for their services. There are different types of stocks available in the stock market, such as common and preferred stocks. Common stocks are the most common type of stock, and they represent ownership in the company. Preferred stocks, on the other hand, typically do not have voting rights but offer a fixed dividend payment. When it comes to investing in the stock market, there are risks and rewards involved. The stock market is known for its volatility, and the value of stocks can rise and fall rapidly based on various factors such as economic conditions, political events, and company-specific news. However, investing in the stock market can also be rewarding, as it offers the potential for long-term growth and can provide a source of income in the form of dividends. Additionally, stocks can serve as a hedge against inflation, as the value of stocks tends to rise over time. To minimize risk, it is important for investors to diversify their portfolio by investing in a variety of stocks across different sectors and industries. Additionally, investors should conduct thorough research and analysis before investing in a stock, looking at factors such as a company's financial health, industry trends, and market conditions. The stock market is an important tool for businesses to raise capital. When a company goes public, it offers shares to the public to raise funds. These shares represent ownership in the company, and investors who purchase them become shareholders. The money raised from the sale of shares can be used by the company for various purposes such as expanding operations, funding research and development, or paying off debt. There are different types of stocks available in the stock market. In addition to common and preferred stocks, there are also penny stocks, which are stocks that trade for under $5 per share, and blue-chip stocks, which are stocks of large, well-established companies with a strong track record of performance. Stocks are typically valued based on a company's financial performance and future growth prospects. One of the most common ways to value a stock is by using the price-to-earnings (PE) ratio, which compares a company's stock price to its earnings per share (EPS). A lower PE ratio can indicate that a stock is undervalued, while a higher PE ratio can suggest that a stock is overvalued. Another important aspect of the stock market is the concept of risk and return. Stocks are generally considered to be a higher-risk investment compared to other types of investments such as bonds or savings accounts. However, stocks also offer the potential for higher returns over the long term. By investing in a diversified portfolio of stocks across different industries and sectors, investors can potentially minimize risk while still reaping the rewards of long-term growth. It's important to note that the stock market can be affected by a variety of factors, including economic conditions, political events, and company-specific news. For example, a company may experience a significant drop in stock price if it reports lower than expected earnings, announces a major executive shakeup, or is hit with a scandal. In conclusion, the stock market is a complex and dynamic marketplace that offers both risks and rewards for investors. By understanding how it works and conducting thorough research before investing, investors can make informed decisions and potentially benefit from long-term growth and income. In conclusion, the stock market can be a great way to invest and grow your wealth over the long term, but it's important to remember that it's not without risk. Before investing, it's crucial to do your research, understand the fundamentals of investing, and diversify your portfolio to reduce your exposure to risk. It's also important to remain patient and disciplined, as the stock market can be volatile and unpredictable in the short term. By keeping a long-term perspective and sticking to a well-thought-out investment plan, you can increase your chances of success and achieve your financial goals. Thank you for watching, and we hope you found this video informative and helpful in understanding the basics of the stock market. If you have any questions or comments, please feel free to leave them in the comment section below.